Today, we're going to be talking about the end game for the macro global financial system, what might be coming next, commodities, gold, silver, mining stocks. And we're joined by the Lobo from Independent Speculator, spent many years working with the legendary Doug Casey, and now has the Independent Speculator. We'll put his website link right there down below. Make sure you hit the like button on this video to send it out in the YouTube universe so more people see us. Give us a comment down below. That lets us know your gold price prediction for 2021. And thanks for our sponsor today, Vizsla Silver, for being our silver mining stock sponsor, Vizsla Silver. And it's good to see you, Lobo.
Great to be back with you, Jake.
Okay, so you've been in this kind of niche for a very long time, right? You worked with Doug Casey, the legendary Doug, for a long time, who, really identified the cracks in our system, from politically, socially, economically. And so you've been watching the trajectory of this for a very long time, working with someone like Doug. And I wonder, did you ever think we would be in a position today where an overwhelming people still don't have work? We've got inflation finally starting to really pick up. We've got help wanted signs everywhere, and money's being printed so fast it's hard to comprehend that it has any value even at this very second. Did you ever think that it would happen this quickly and this fast?
Yes and no. The honest answer is I sort of gave up expecting on the when, but as for how quickly, absolutely. Remember the collapse of the Soviet Union. Like people like you and me, and probably most of our audience, we saw the economic contradictions of the Soviet system. Communism doesn't work. The attempt to get close to it, socialism, state ownership of the means of production, crazy idea. But, it lasted 70 years, right? So, and as soon as I had some concept of economics, and then I saw, the inefficiencies of a non-market economy, I'm like, oh, that can't work. That has to go. But that was like as a teenager. And then, I'm still there in my 20s. It's still there, right? And then finally, it just goes. Like it's that old oak tree that looks so solid but turns out to be hollow when the storm blows it over. So now I want to rewind to something you said at the beginning in your intro here. I'm not actually convinced that we're in the end game yet, right? The storm may not have blown the oak tree over. Now that doesn't mean the oak tree isn't hollow. So I'm saying, yes, I can absolutely believe things can unwind quickly. And even though the powers that be are saying everything's fine, all the problems are transitory. And by the way, like problems like inflation, that's transitory. But employment researchers, that's not transitory. That's good. Like anything good, that's not transitory. We've got a recovery. Everything's fine. Anything bad, oh, that's transitory. Yeah. So I'm not trying to be a prophet of doom here. I'm not saying the end is nigh, it's coming next week, and they're just in denial. Though, to your question, when the end does come, when the house of cards comes down, it'll be fast and furious, and nobody will get out on time. It'll be the people who were there in advance who prepared. Better a year or two soon than a day late on that deal. So I think I've more than answered your question, but yes, I can see it fast. I'm not quite ready to say that this is it, though. This might be the beginning of it, but the powers that be have been able to kick that can down the road so many times I didn't think they could. Didn't think they could after 2008, and boy, they sure did. So I'm not going to put the guru hat on that one and tell you what's going to happen.
Okay, so tell me then, if this isn't the end of this present monetary regime, what would make you believe that it was? Is it that you get to a position where you really see the total loss?
Yeah, I know exactly the answer you're looking for. The answer is foreigners dumping dollars.
Okay.
Like that is the linchpin. As long as the Fed and the powers that be here can convince those very nice foreigners to keep accepting dollars and keep thinking they have some kind of value, it's possible for them to kick the can down the road. It's possible it seems just Inconceivable, right? Um, but they can get away with stupidity for a long time. We've already seen that. And but the moment that happens, the moment the foreigners start saying, you know what, the dollar doesn't really look as sound as I thought, and maybe I need to lighten up on my dollars. And I'm not just talking to Chinese and the Russians that have their geopolitical goals for moving away from the dollar. I'm just talking more generally people. If they start saying, yeah, the emperor has no clothes, maybe I'll start heading for the exit. That would really change things. The U.S. would no longer be able to export inflation. It would no longer have the exorbitant privilege of being the reserve currency in the world. That changes everything. Everything that the U.S. has been able to get away with so long becomes much more difficult. And finally, not to beat it to death, but my base case expectation here is stagflation, higher inflation, and economic weakness at the same time. But if that actually scares those foreigners into dumping their dollars, then that can easily go out of control. Like the Fed thinks they can control inflation. Oh, we got the tools. But that assumes the status quo. If the status quo breaks down and the world starts dumping dollars, I think there's zero ability. Even a Volcker couldn't save the dollar at that point. And yeah, that would bring the house of cards down.
What would they dump it for?
Anything but the dollar. But yes, you can have, and one thing, by the way, that you didn't have before was a currency, a fiat currency that seems like a viable alternative. You do have that in the euro now. There's a lot of reasons to be skeptical of the value of the euro. Our friend Doug Casey likes to call the dollar I owe you nothing and the euro who owes you nothing. And I subscribe to that interpretation. But it is an alternative to the dollar. So even if that might be a temporary, semi-safe place, it's not the dollar. So it gives you somewhere else to go. And then if that blows up, the EU falls apart under stress, then you might look for something else. You might also start saying, you know what? All of these funny little colored pieces of paper are worthless. You can't even wipe your butt with them without scratching yourself. They're just not useful. I want something real, something of value. And we could see monetary metals go back into actual circulation, or if not as coinage, as backing for digital exchangeable currencies that are truly backed by gold. Which, by the way, answers that long question of gold being inconvenient. The same answer the Bitcoin people give for how slow Bitcoin transactions are. Oh, well, there's this other layer on top of Bitcoin, and that's fast. Well, the same thing applies to gold. You don't actually have to ship your gold around the world. You can ship ownership of it. Anyway, too long an answer to your question. Yeah, I do think there are alternatives now. I think the world might experiment with other alternatives, fiat alternatives to the dollar before they kind of give up on the idea. But I'm optimistic that at some point reality will assert itself. People will see that none of the emperors have any clothes. No government promise. What does this piece of paper represent? The good faith and credit of a government that lies, cheats, steals, and fails all the time? What kind of deal is that?
That's pretty well said. So, how do you get out of stagflation, right? Like everyone's seeing that everybody's seeing that there's 4 higher signs everywhere. In the town I live in, there was no shutdown, so nobody lost their job. Yet right now, there's 4 higher signs everywhere here, everywhere. My favorite restaurant, a high-end restaurant, I go in there to a very nice restaurant and buy some nice wine. They serve me in a plastic cup. And I finally said, why are you guys come on, I'm not going to come spend my money here if you're going to give me, I can't even cut my steak with my plastic knife, And he said, well, we don't have anyone to do dishwashing. And I said, make it snappy. So he said, we'll have it in a month. And I came back in a month. They still didn't have it. And I made a joke and I said, too much stimulus money? And he said, yeah, no one will take our job. I mean, I look at that, even if you get outside of the whole macro and what's the new currency, I'm just like, how do you correct course just in America alone in a stagflation environment?
Okay, so a couple answers here. One would be starting with sort of the mainstream case here, and that is that we're not in stagflation. This is just a temporary aberration. It's not a real problem is just this COVID thing, right? It's all transitory, right? If you believe the transitory narrative, which I presume most of our audience doesn't, but let's just, set this as base case. But to whatever degree that the problems that you're describing, we're all experiencing are transitory, that does take care of itself. And some stuff, honestly, Jake, I got to say, some stuff is transitory. You have a lockdown. It's an artificial lockdown. It's not like the economy actually fell apart on its own. They shut it down, and you unshut it down, and it will come back somewhat. Now, I'm of the view that if you just turn off the motor of the world, a la John Galt, but then flip it back on again, you can't do that without any damage. There will be long-term enduring repercussions for what was done in 2020. And this idea that it's all transitory is my problem. It's not that some isn't transitory. You open up again, and of course people go back to work, they go back out to eat, they travel and so on. I think that's going to happen. But the question is, do we end up with less growth, enduring harm? That stagflation may not be as bad as during the worst of the COVID shutdowns. But it won't be healthy, happy, joy all over the place again. And I think that's a real issue. To answer your question, though, how do you get out of stagflation? Volcker did it by ending the inflation, by cranking up interest rates and putting some fiscal discipline in there and stopping the inflation. Now, I don't know that that's even possible anymore. Particularly from where we're at, I don't know that you can do that. To be able to raise interest rates presumes that there's, some economic activity there that can tolerate that. If you're in recovery mode, right, and if your interest rates are being kept zero because you dare not raise them, then that tool that you have to deal with inflation is in fact out of the toolbox. You can't use your only tool if it's going to kill the thing you're trying to save. But that is one answer. The other answer, if you look sort of like not just stagflation, but a bigger currency crisis. When you have a catastrophe that really takes an economy down to its knees and maybe down just completely prone, down for the count, and the people just don't trust the money, hyperinflationary situations, how do you fix that? You don't fix that by electing a new guy who makes a more convincing promise that the money really will be worth something this time. You have to scrap the old system. Right. You cannot, at that point, you cannot save the old currency. In places like in the former Yugoslavia, what do? The people will not trust the money, so you start backing, you issue something new back with Deutschmarks at the time. Or in Zimbabwe, you start backing with US dollars. You cannot save a currency that's been destroyed. When people have zero confidence in a currency, you can't just put more zeros on it, put a new face on the bill, and it comes back. No, you have to substitute it or back it with something that people do believe in. And that is a very painful process. That creates a lot of haves and have-nots. It's of course, you're already, you've already gone down the spiral there, and you have no choice. You do what you have to do because there is no choice. Those are, dire situations, Jake. And, part of me kind of wants to see it happen just because these bastards deserve it. The powers that be need to be taught a lesson. But a large part of me doesn't want to see it because so many people will be hurt. So many, businesses will be destroyed. Lives will be destroyed. People will literally die because they will be impoverished and lives will be ruined. So it's a really bad situation. And I'll never forgive those people who should know better, who are egging it on.
Okay, so one of the ways that it seems like maybe they're trying to put a Band-Aid or some type of an intermediary in there is with central bank digital currencies. Forbes, Bloomberg, many of them covered China's recently, where they have programmable money and all these things. And now all the officials or many of the big smart people in the United States type of system have said they need a digital dollar. Where do you think this kind of comes all into play? And next we'll talk about gold, but I kind of like to start there, talk about this, because all of these types of things are what ultimately lead me to wanting to, first of all, own my mining stocks, my commodities, but second, have my physical gold and silver legitimately outside of this system, because as you said, it lies, cheats, steals, it's totally fraudulent. I want to preserve my wealth. But first, what do you have to say about these central bank digital currencies? I'd imagine this is something that, you probably heard for a long time. Doug probably talked about, I would imagine long ago, this
Yeah.
was floated conversation.
Yeah, I think Doug was the first one that I heard use the term Fed coin. But so here's the thing. You can never underestimate the power of human stupidity, quoting Heinlein. And just because the dollar is worthless, I mean, it should seem obvious. If the dollar becomes problematic, people lose faith in the dollar. How does a digital dollar make that better?
I
I
don't
mean,
know.
really, I mean, I'm not joking. That's not just hyperbole. If they've actually lost confidence in the dollar, the almighty dollar, that wonderful reserve currency, that ultimate safe haven to people who've never heard of gold. If you lose confidence in that, why is a digital trace, a ghost of that physical dollar, somehow an improvement? So I don't think that should matter at all. If we're having a currency crisis, I don't see going digital as being, at all any kind of improvement. I don't see why anybody should have any greater confidence or place any greater value in it. But then again, as I said, never underestimate the power of human stupidity. If the government says, "Oh, but it's a digital, it's blockchain now," that's good. Well, we've seen stocks Kodak, but Kodak is a dying company that doubled almost overnight because they said we're going to do something blockchainy. We don't know what it is yet, but we're going to do something somehow related to our business that has blockchain. And the stock doubles; it goes up 100% because blockchain. Oh, blockchain. Right. So the government says, "Oh, blockchain dollars." I can see a lot of gullible people saying, "Oh, that must be great. It must be good." So it could happen, Jake. It shouldn't. It shouldn't make any difference at all. But it could happen that somehow going digital kicks the can down the road a bit longer. But at the end of the day, it doesn't matter. I mean, reality does matter. And going digital doesn't change anything. It just makes it easier. You don't have to print the stuff anymore. We already don't print it largely. So it's not, in a way, that big a change. We're just sort of acknowledging the reality that people don't carry cash anymore. They use credit cards anyway. So you just go all the way that route. And of course, the real sort of the question here is, does the government try to promise that we won't print too many of these? Right? If they say, the argument for Bitcoin is there's only ever going to be 21 million of them. Right? If the government tries to say that's what we're going to do too, there's only ever going to be 21 quadrillion, billion, trillion of them. Fine. Right? Maybe people say, "Oh, well, that's good. That sounds good. Maybe it'll go up like Bitcoin." I don't know, Jake. But if they did say, they're not saying that. They're just saying, "Oh, let's go digital." Nobody's talking about restricting the supply. But if they did do that, I wouldn't believe them. And nobody should believe them. Will people? I don't know. We'll have to see how that rolls out. At the end of the day, even if they promise that, they're not going to keep that promise. It's kind of like the federal debt ceiling. Why do we even have a debt ceiling? Every time we get close to the debt ceiling, they just raise it. It's not a ceiling if you can raise it all the time. So no, none of this makes any difference at all.
That's funny. It's not a ceiling if you can raise it all the time.
Am I right?
No, that's hilarious. So if they are raising the ceiling all the time, just for a layman like myself that says, all of these ideas, this makes me scratch my head and say, well, everything happening right there should be very good for gold. Gold should be like $700 million an ounce right now. But it's not. And so let's talk a little bit about, since August 2020, gold hasn't moved. I was telling you off air that it is interesting to watch comments on the channel where some people, they kind of move with the momentum. People such as yourself have talked how it's often actually very hard to make money in bull markets because you get these huge pendulum shifts and people always sell and buy at the wrong time. And so there's a lot of people leaving, and I wanted to talk about gold, your thoughts on it. Have you ever seen a better macro environment? And on the micro, why isn't the price moving if the macro seems so great?
Sure. Well, absolutely agree on the macro. I'm I'm older than I look, but I'm not that old. I've seen a few cycles now, but I'm not Doug or Rick yet. But still, I've never seen better macro circumstances. I mean, the level of profligacy now, and I don't think it's done, it dwarfs what was done after the so-called great financial crisis. And that it's through nobody's fault. It doesn't matter. It doesn't matter whose fault it is. It's irrelevant. What matters is they're printing money. What matters is the Fed's got that easy money policy nailed down. As you and I speak, I don't know when this will be posted, but the Fed is about to come out with their new statement where it is the Fed is meeting now as you and I are virtually meeting, Jake, and what they will say could shake the world. I don't expect policy changes, but just changing happy for glad in the wrong place could really shake up the markets. But what I'm saying is the macro picture I think could scarcely be more bullish, and it looks like nailed that way for probably years to come. So I'm extremely bullish. Now, why isn't gold doing what it's supposed to do then? Well, what does that mean supposed to do? Now, a couple layers here. One is, a price is not what we think it should be. A price is not what we calculate the supply and demand dictates. A price is not the supply of dollars, in this case, divided by the number of ounces of gold supposedly in Fort Knox, which may or may not be there. You can do all these intellectual exercises. That's not what a price is. A price is whatever buyers and sellers agree. A price is what clears the market. Right? If we're going to criticize governments for setting prices that are artificial or wrong, then we shouldn't try to say, oh, this is what the gold price should be. The price should be whatever buyers and sellers agree. Now, our problem as gold bugs is that we don't want to sell anything. We want to see prices go up. But there are traders out there who are perfectly happy to buy and sell at prices we don't like. But you know what? They don't care what we like. Our best defense, I think, is to stop referring to these trades, these paper trades and LBMA comics trades, stop referring to that as the price of gold. That's not the price of gold. That's the price of futures trading. And if we don't like what that price says about gold, then we should stop using that. Stop. So what I'm saying is, not everybody agrees with our perspective, Jay. And not everybody agrees even with the perspective of most of our audience, who is a tiny minority in the overall world. And if people out there the world over are willing to buy and sell gold at prices that we think are wrong, if we're right about the value, then that is an opportunity. But that is the price. If somebody goes to their shop in Shanghai or in Bombay or in London, and they sell an ounce of gold for $18.30, and we think it should have been $28.30, we don't get any say in that. That's the price. So I don't want to repeat myself. Understand that prices are set by buyers and sellers, and right now there are sellers who are willing to sell at prices that you and I don't like.
So then is it a battle of understanding the value versus the price? I mean, you've been through these before. How do you net, especially when you're in a mining stock that moves at a multiple to the price itself? Talk a little bit about that.
Well, it's a good way to frame it: value versus price, and that is always that's actually sort of the keystone, really, of the Doug Casey method, if there is one, is that value and price diverge. And if prices are being pushed down, the prices we're quoting for gold or silver are lower than they should be, or what we think they will be, the value is higher, the price is lower, well, then the price should rise to the value. When value and price diverge, there should be a convergence back again. So if we're right that the value of gold and silver is greater than what the mainstream is willing to trade at these days, then that's an opportunity. Right? To the degree that the markets are wrong and we're right, of course, assumes we're right. But if the markets are wrong and we're right, that's an opportunity. Don't whine about that. Make use of it. Buy it. That's how Doug Casey made his fortune, understanding the difference between price and value. He said, you know what? That's cheap. That shouldn't be that cheap. That's an opportunity. And I'll throw one more thing. I just had a little bit of an epiphany talking to another young interviewer who asked me a question. And we were talking about cryptos and gold, and why should young people buy gold? And I was making the case for, at the very least, diversification. And the thought crossed my mind that when Bitcoin hodlers get a sudden reversal, like it drops 20%, 30% in a day, they don't throw up their hands in disgust and say, oh, I'm out, I'm done, I hate this, oh, it's so volatile, it's being manipulated, the government is in a conspiracy to smash Bitcoin. They hodl. Maybe they're not happy about it, but they don't give up on it. And it just, it seems to me, what? There's something to be said for the investment courage that these young people have. And some of his older gold bugs could maybe learn a lesson or two from these millennials that have the guts to hodl because they believe in their investment thesis rather than whine and complain and seek who to blame and gnash their teeth. And by the way, get so emotional that you make bad decisions. Like you were just saying, people, they get pissed off because the price is down and they sell. Well, that means they've sold low. And then they, things look good again. Prices are high and they're rising. Everybody's excited. When they get back in again, they buy. Well, that means they buy high. So by being emotional like this, by not having the conviction of your investment thesis, you end up inverting the speculation formula and you end up buying high and selling low. You do that a few times and you're out of money. You're out of the game.
So, how do you deal with your emotions with it? I own all types of commodities, crypto, all types of stuff, and all of them are very volatile. And I've noticed it's taught me a lot more about myself and personal development than I think maybe I was anticipating when I started investing heavier and heavier. And you've been around Doug for a long time. You said made his fortune by following this, as you called it, the speculator's formula. Talk to me a little bit about that process.
Well, good news and bad news, Jake. I got to say, there is something of this that is temperament, personality. There are some people, I'm sorry to say, but it's true. I think it's true. So I'm just going to say it. I think there are probably some people that just shouldn't be speculators. They're just too emotional. They get too upset when things don't go their way, and they make poor decisions. That's the bad news. Sorry. But the good news is that experience does matter. I mean, you talked about, I'm sure you had one of these things where you just have a sort of come to Jesus moment, like, holy beep, I'm down what? And the story is better. Like they've discovered more gold or they have a whole new uranium mine or whatever, and the stock is down what? Like what? Either I'm the world's biggest idiot and I've totally missed some obvious Achilles heel here, right? There's a gaping hole under the waterline and the ship is sinking and I'm not seeing it. Or the market is wrong. There's an opportunity here and I got to screw up my courage and act on my convictions. And you have those moments and you break out in a cold sweat. You think about pushing that send button on the buy order when you're going to average down. Even I must say, I feel that. But that helps. When you do that and you hit that button and it works out and you were right? There was nothing wrong with the company. And it comes screaming back when everybody realizes, oh my gosh, there's a bunch of value here that's undervalued. You do that a few times and it really does help. So I guess again, my honest answer is if you look yourself in the mirror and you say, I can't really handle this, then maybe you should stick with the bigger companies, less volatile companies, or go with ETFs, get some exposure to the sector in some less volatile way. But if you want to make money, if you're looking for capital gains, you want to swing for the bleachers on those hockey stick type charts, then you've got to do it, Jake. And you know this. You've got to do it. You've got to take your lumps. You've got to celebrate the wins and drink those wins in because they'll give you the courage. That experience will help in time.
I want to ask you a little bit about working with Doug. First of all, you worked with him for a long time. How old were you when you started working with Doug?
That's classified.
What can I get a Freedom of Information Act request for that?
Well, like I first crossed paths with Doug in the early 90s. And he was a donor. He became a donor to some of the nonprofits I was working with when I was doing my grant writing proposal. in the late 90s. And so we had some correspondence, but really I got involved with the Eros Society that Doug used to run, which was Eris, not Eros. It was, an annual convention of really interesting, sometimes loony, but always independent thinkers, lots of fun. And I ended up probably starting year 2000, participating in Eris, and I ended up with my then partner running the conference in 2004, and that's when Doug and David offered me the job at Casey Research. So not quite 20 years ago, 17, 18 years ago. And I'm not sure exactly what the question here is, but
now I was just curious for starters, how long ago? I mean, really, what I want to know.
So yeah, I mean, the actual hire date when Doug and David offered me a job was actually my birthday. I started working on my birthday, August 23rd, 2004. They didn't know it at the time, but it was the best birthday present I ever got.
So tell me a little bit about what would you say are the biggest things you learned from Doug for success, for thinking? Obviously, you're talking about a guy who's one of the most legendary speculative investors. Obviously has made a incredible fortune. And yeah, you got paid, you worked a job, but I would imagine just as much or more in the long term came from the things you learned. And I was just kind of curious, what were some of those things?
Well, yeah, and on top of that, I got to travel, meet interesting people. I got to look at the rocks, and I love geology. I never studied it in school, but I've always been fascinated by rocks. I collected them when I was a kid, and I love writing, and I got paid to do all of these things. I would have if I was as rich as Doug, I would have done it for free just to work with him and learn from him. In terms of the biggest lessons, we've already gone over one, and this is in a way something that you're aware of. But Doug really made it real, and his investment decisions, the way he analyzed opportunities, was this issue of the difference between price and value. Another really fundamental Dougism, which is not really unique to Doug, but which Doug always made more clear and helped me understand, is the difference between bullion, which is savings, which is physical wealth, the financial asset, and that you can be long for which there is no short, right? That's one thing. And then they're speculating on the stocks, completely different thing. They're not the same. I don't speculate on gold prices. I buy gold whenever I can because it's gold, right? So that was one thing that you kind of maybe think but Doug really makes it crystal clear. The one is not a speculation at all. Other things are, one really impressive thing is, as much as Doug is a gold bug, and it's easy to get excited and zoom in on the junior mining stocks because that's where so much of the action is. That's never the only thing Doug is doing. He's always got some real estate going on, or he was actually an early, in a way, not early. He was anti cryptos for a long time, but he jumped on Bitcoin before the big vertical swings. Before that first one in 2017. He also got into the marijuana space when there were only private vehicles, really, before all these companies went public. Made a bunch of money there, and he's done other things like that. So he's a polyglot. He's one of these Renaissance men. He could probably have a degree in 10 different subjects because he's interested in everything. I got to say, I'm not sure I'll ever be the next Doug Casey. I don't know that I have, frankly, the ability to do everything that he does. I used to joke. He never said this. I used to joke that I was the Mexican knockoff Doug Casey because he was getting older. He didn't like banging his head on these colonial tunnels, So he'd send me into the mines to go look at the rocks instead. But honestly, I don't know that I'll ever be able to replicate what Doug does. And there is a sort of, you could call it instinct. It's not. There's an intuitive sense. There's a quality of his analysis that you can't entirely write down. And I can illustrate this by saying he would often give me a research task, and I'd do all my more mathematical, logical, here's the facts, here's my conclusion research, and I'd present it to him and say, oh, that's really smart. But this is what we're going to do. and he was always right, or to my memory, it seemed like he was always right. And so I'm not Doug Casey, and I don't know that I'll ever be Doug Casey, but I have learned the parts of what Doug does that I can adapt for myself, and I have a method that works for me.
Awesome. Yeah, it was. It had to have learned a lot of interesting things. I was reading your guys' book, Politically Incorrect, the other day, and that's always a good laugh. But let's talk a little bit now about uranium. We cover uranium a lot on the channel. You've been studying commodities for a long time. To me, it's really incredible to watch, um, because it's such a black and white thing. I mean, it's like I couldn't think of a more no brainer thing, especially Sprott getting involved with the uranium trust. And I want to get your take on what you see out of uranium right now, and your expectations for it moving forward.
Sure. Well, I quite agree with you, but I always have to throw the caveat in there of that this is one that can literally blow up on you. And my uranium bug friends hate it when I say this. They want to focus on the business fundamentals, which are amazing, right? You unlike most other commodities, you've got copper hitting all-time high prices, nominal highs. You've got nickel at high prices. You've got lithium at high prices. Coal of all things is at high. In coal's even as hated as uranium, maybe even more hated than uranium.
Yeah, probably more. Yeah,
and it's hitting it. Coal is close to an all-time high as you and I speak, Jake. I don't know if you knew that, but it's just gone screeching back up again. So you've got all these commodities that are way, way up, and then you've got uranium, which is it's not actually at the bottom. It's actually been in an upward trend for 5 years. But it's one of those highly volatile 2 steps forward, 1 step back, 2 step, very sawtooth pattern here. But that sawtooth pattern is going upwards. And my technical friends tell me that it's very important that the series of higher lows has not been violated. It keeps notching higher lows. People hate it when it goes back to another low, but that it keeps notching higher lows says that the trend is going upwards. So that is true. It is not at $18 where it was before. It's at $32 as you and I speak, which is a dramatic improvement, but that's still way below the average cost of production. And if, as our friend Rick Rule likes to say, you throw in cost of capital and everything else, the incentive cost here is at least $50 a pound, maybe 60, maybe more, to really get the industry on an even keel. So we're just barely halfway to the incentive price that uranium needs, and which basically means that there isn't going to be enough of it unless prices go higher. And you have to have it. You can't substitute. Yes, people are researching these modular reactors that can recycle consumed uranium, so-called spent fuel, and they're looking at thorium reactors. There's a lot of new technology coming down the pike. None of that is in commercial deployment now. And the plants that are being built now for commercial use, not demonstration plants, the nuclear power stations being built around the world, especially in the BRICS countries, they're all conventional, the same kind of uranium burning nuclear power plants that we all know and love and hate. They're there. So the demand is there. And there are more new plants being built and planned to be built than are coming off the books. So the demand is super solid, and you can't mine the stuff for the price that we have now. So that's the black and white no-brainer that you're talking about. All of that having been said, as you and I speak, it's funny, a momentous week for us, Jake. There is a scare going around now about a nuclear power plant in China that has some anomalous readings that the French partner sounded the alarm. It scared a lot of people. As far as we've been able to tell, there's no radiation link. The U.S. government has looked at it and says right now there's no problem. There's some concern that something isn't working quite right. And that's got a lot of people scared. When this came out yesterday, as you and I speak, it was yesterday the news came out, and you could see across the board, uranium, the bigger plays, the little plays, down significantly without any other news or price movements. So, and that's just a small little, by the way, there's something weird going on in China headline. You have another Fukushima, or, even Fukushima and 3 Mile Island really weren't that bad. You have another Chernobyl type event, and uranium's going effectively to zero. Our uranium stocks will be smoking craters in the ground. That's just the reality, okay? Now, I don't think that's going to happen. These things are very rare. There's only really been one Chernobyl. Lessons were learned. Even Fukushima, where you had this natural disaster. By the way, it wasn't a nuclear accident that blew up the world. It was a natural disaster that, you know, was an exceptional event that took down some of the safety factors at that plant, which did shut down and has been contained. So really, these Hollywood movie scenarios of the end of the world because of some nuclear accident, I just don't think that's in the cards. But never say never. Something could happen, and I just have to always remind people that yes, this is swinging for the bleachers. Yes, there's a potential here. If uranium doubles, what's that going to do to the uranium stocks? This is the stuff 10 baggers are made out of, Jake. This is why we speculate in these, crappy little junior companies to begin with. We're looking for these 10 baggers, 20 baggers. Uranium has delivered 100 baggers, right? That actually happens. And sorry, I'm going on at length here, but I like to throw this in because people like to say, oh yeah, well, Apple was a 100 bagger, Microsoft was a 100 bagger, Tesla. But Apple and Microsoft took decades to deliver those terms. And you talk about ups and downs along the way. You had to not only weather these ups and downs, you had to weather them for decades. Whereas a 100 bagger in a mining stock can happen in 1 year. Right? And even Tesla didn't do that in a year. So I'm not promising that I know what the next 100 bagger is going to be, whether I'm not trying to sell anybody. Oh, sign up for my secret report and I'll tell you what the next, I don't know. Nobody knows that. Not even Doug or Rick. Nobody knows who's going to be the next 100 bagger. I'm just saying it's possible in the uranium space, and the stage is set for that kind of possibility to come to fruition in the next year or two.
I think it's going to happen. So let me ask you then, as we kind of wrap ourselves up over here, what did you make of Paul Tudor Jones saying about commodities being squeezed the other day?
Yeah, I thought that was interesting. I posted a link to that where he says he's going all in on inflation trades, and he included gold. So that's fine. I think he also included Bitcoin. As, different strokes for different folks. So it's not just a gold bug thing. It's a macro call, and I think it was wise. It's funny. I posted that, and somebody tweeted, "Oh, this guy knows nothing," and somebody else said, "Yeah, this billionaire, super successful guy, he must not know anything at all." At the same time, the funny thing to me is that at the same time, so you've got Paul Tudor Jones making this big call, visible call. It's nice to see. And then you got Jamie Dimon over here saying kind of the same thing. Oh, we're worried about inflation. So what is his call? What is his call to action? Oh, we're going to cash. What kind of sense does that make? You're saying you see high inflation. What does high inflation mean? Inflation means the money's losing value. So we're going to go to this thing that's losing value? What's wrong with you? Right? And my joke about that was, oh, JP Morgan, maybe they should become a gold custodian. Wait a minute.
Yeah, basically. Yeah, I'm not sure I would trust Jamie Dimon with just about anything. So I think I have a little bit more trust in Paul Tudor Jones, but I guess we'll see who's right coming down the pike. So give us your gold and silver price predictions for 2021.
Oh, Jake, you know that I don't like making predictions.
You know that I ask you anyways.
But I will say, the safe bet is to say what, but not when. So I do think that if I'm right about my macro thesis, if I'm right that the fundamentals have never been more positive for gold and silver, then I do think we see new all-time highs. That the ones that we saw last year are not the peak for this cycle. I think the COVID shutdowns kind of pulled, and I actually talked about it at the time, wrote about this at the time. I think that some of this secular bull market that we're in was pulled forward by the COVID shutdowns. And so you had a much quicker rise, and then of course you have a correction. We need to get back on track to that longer, fundamentally driven track that we're in. And I think we will. And I think that will take us to new nominal all-time highs. I think it will take us to new real all-time highs. And even using the government's BLS data, that means plus $170 silver as a peak, not as a sustainable price, but as a peak, it means plus $170 silver. And it means almost $3,000 gold. So there you go. I think I'm comfortable saying that gold and silver will go higher than those prices. How much higher? Depends. Like if that thing we talked about earlier with the foreigners giving up on the dollar happens, those prices are peanuts compared to how high they'll go in that kind of circumstance. But if not, just sort of regular run-of-the-mill ho-hum high inflation, I think they'll hit that higher, maybe higher, and then we'll see what
happens. What commodity best performer 2021?
For just 2021, I got to say, it might be uranium. I think it's starting to happen here for uranium. Now, it could be that uranium does another 2 steps forward, 1 step back thing, but I don't think we've really got that 2 steps forward yet. If it pulls a 2 steps forward this year, I think it could outperform everything else. And I say that because, copper and nickel and these others, they've already gone up, whereas uranium hasn't. Gold and silver, I think they go up, but unless that we get into that next sort of mania phase, I don't know that they have quite as much potential for uranium. When the buyers come back to the table, when the utilities have to start buying and the miners aren't going to sell at the current prices, there really is potential for something on the order of a double in just the metal. And, that can happen in very short order. Whereas, for the other metals that have already gone up, that's harder to happen. Another double from here could take a lot more time.
Yes. Okay. So we got Lobo's website right there down below, Independent Speculator. The link is in the description right there down below. Give us your prediction on what commodity you think is going to be the biggest winner for 2021 right there down below. Now, the final question, Lobo, flash forward 2025, 2026. What do we got? Biggest commodity winner. Is it still uranium or is it something
actually,
else?
I think we're looking at copper, and there could be a lot of other things. But in the longer term picture, I'm a huge copper bull, and it's not just the EV story, but the overall electrification story of the world. It's Dr. Copper. It's the essential industrial ingredient there. And yes, by the way, I have seen the YouTube videos about aluminum and aluminum graphene and other conductor competitors out there. But one, it's a long way from the lab to the marketplace. And so these new superconductors or combinations of other elements, cheaper elements, I think it takes a long time. As we're seeing just with the EVs, it takes a long time for new technology to get adopted. And in that time, I think we see copper go higher. It has serious structural supply constraints going forward. And the other thing is, this substitution just for aluminum. Like copper is a better conductor. It's more ductile. We had an attempt to replace copper with aluminum in the US in the 70s, and it resulted in a bunch of house fires. It's banned for use in home wiring in places because of that. So, yes, high prices does incent the market to look elsewhere for substitutes, but copper has unique attributes which are just not replaceable in many uses. So I'm extremely bullish longer term on copper. I think it goes higher and higher for a long time, with volatility along the way. And by the way, it's not uranium. My uranium bug friends hate it when I say this, but uranium is not rare. And even if demand doubles and doubles again, high prices will be the cure for high prices in the uranium market because there's tons of that stuff.
Right. That one's a more quicker get in, get out, get your bag game, right?
Don't leave money on the table on that one. I'm extremely bullish on uranium, near term, but midterm to longer term, just make sure you take those profits. Don't let them slip through your fingers.
Right. Okay. So give us your comments down below on what you think. What about 2021? What about over the next 5 years? Let us know down below. Make sure you hit the like button on this video to send it out in the YouTube universe so more people see it. Many of the big news and finance media channels pay YouTube to pop up in the algorithm. So if you think we do a good job on our channel, one of the ways to help us compete, quite simply hit the like button, give us a comment down below, share this video on social media with some of your other friends that are interested in commodities, gold, silver, and speculative investments. You guys can watch it together. And be sure to check out Lobo's website right there down below. And I want to thank you for coming on, Lobo.
Thank you, Jake. You got me riled up here. Probably a little more emotional than I normally am on these videos, but it was fun. Thanks.